Welcome back to the Precision Trader. In today's video, I'm going to be covering just a couple stocks in the stock market, covering our favorite strategy for Bookmap, how to take advantage of this amazing tool. If you're not familiar with Bookmap, it just allows you to see where the vast majority of the people in the market are looking to buy and sell. And of course, that's signified here for us in a heat map, where you see the orange and red levels, that's where you have your highest concentration of people buying and selling over here. And then you have your price increments there. So with that said, having this information is extremely invaluable, but being able to interpret it is just as important. So with that said, our favorite Bookmap strategy is simply to find stocks with major liquidity above. They're pushing to it. One, we can either play to the major liquidity above, or wait for it to get to that liquidity, and then we're going to play to the downside. So shorts to the down, and then or play the momentum to the major liquidity. So with that said, just starting the day, we're going to start here with Celsius. This one we picked up on the scanner this morning, moving nicely. We grabbed it, was able to take advantage of in the voice chat. We found it a little late on the scanner, so we could only wasn't able to get it out to the play channel. But with that in the server. But with that said, just looking at it at this, to start the day here on Celsius, again, our bias for direction is always where the majority of liquidity is. So in this case, when you look at Celsius, what is your bias? To the upside or the downside? Well, I'm sure you'd agree that it would be to the downside. So with that said, your bias for Celsius would be to the upside. Now, if you wanted to play momentum, well, it's very simple. Just make sure, ideally, make sure you're on top of that VWAP, and and look for the push to the upside. So with that said, we'll start scrolling to the right here and see how it worked out. We see we pushed up, came back to our VWAP, bounced off of it, held our VWAP quite nicely, and then from there, we finally made our way to this 105 liquidity. Now, that's a major level. He pushed from around 199, somewhere in there, all the way up to 105. Now, if somebody wants to take profit in that level, I can't blame them whatsoever. Because honestly, more times than not, the safer thing to do is take your profit, and then if it proves that it can absorb this liquidity and get on top of it with support candles, then you get that confirmation. You get 2 to 3, anywhere from 2 to 4 1-minute candles that hold support on that. Great confirmation, or a 3-minute candle, 5-minute candle, something like that. Then you got nice confirmation that you're going to hold that liquidity. Okay, there's not the sellers are not going to dump it off that level, and you can play to the next major level of liquidity. So, but at the same time, if this liquidity was not up here and it was just this, I can tell you right now, the probabilities that it was going to dump back to 103, 102, 101, or even lower, very high. But understanding that we have a major level and an even bigger level, even a larger level behind it, shows that, hey, there's a good chance if we can get this 105 liquidity absorbed, support on it, we're going to be heading to 110. So with that said, let's see what happens. All right, so textbook. Push up, we absorb the liquidity, so all these orders are filled. Great. So we're going to get the initial push through the liquidity, and 9 out of 10 times, what are we going to have to do? We're going to have to come back and test this liquidity. It's like clockwork. Okay, so we come back, we test it, and from there, we start getting support candles. All these support candles right here. That is very good confirmation that we're heading up to this liquidity. I mean, it's just, I can't tell you how many countless times I've seen it. So with that said, stop loss, you're going to want to have your stop loss down here, down here below where the liquidity was. Now, if there was a, major liquidity sitting right here, do I want to put my stop loss right there in front of it? Of course not. It'd be on the back side of it. But no major liquidity below, so green light for the upside. Let's see what happens. A little bit of liquidity comes in there. They knock it down. Buyers come back in here, hold it up, and then eventually, bam. So that's ultimately where they get to. Now, this is free money. When you have a monster level of liquidity like it was here at 110, and again, what do we qualify major liquidity? Something I can see on the $5 increment. Can you see that on the $5 increment? Very much so. Yeah, that is very, very visible, very easy to see. So you know that qualifies as major liquidity. So and there's nothing major behind it. When you see that, I'm telling you, it is free money. All right, now free money to the downside because there's going to be a ton of people looking to take profit. So with that said, gets up here almost to the penny. And again, where do we always enter? Just in front of the liquidity. And then what? We're going to play it back to, more times than not, where does it go back to? The liquidity that it just came from. So with that said, ends up pulling all the way back. And yeah, and then where the buyers finally coming in? 104, 105, and that's exactly where they start holding it. So, but with that said, the overall market got bad, some news, and they just started dumping through the floor. So anyway, so that was Celsius. Good example there. Another thing I wanted to show you example of is how you could have used the S&P today, the ES and the S&P to predict the overall market, because I'm sure most of you know that SPY or ES is the lead dog in the stock market. Now, with that said, that's not guaranteed every single day, especially whenever you're going into earnings or something like that. But the majority of the days, if you can predict which way SPY or the ES is likely to go, you can do very well in the market. So with that said, we're going to pull up SPY and the ES, and I just want to share some insight on how you could have used SPY and ES to take advantage of the market. Now, the past 2 days, ES has been very difficult to read. There's been just a lot of liquidity all over the place. So the past 2 days, very difficult. Whereas SPY's levels have been very clean, very concise. You can see here, very clean, stand out. Yeah, easy to read. Whereas, unfortunately with ES, it's just been a lot of stuff everywhere. Some of this higher liquidity was a little bit, easier to decipher, but with that said, it was just, quite difficult to read. So when that's a situation, why not take advantage and see what SPY looks like, SPXL. Again, one of those three, the vast majority of the time, is going to give you some clear insight. So with that said, ES, you could have definitely, a lot of areas where it would have been very beneficial for scalping. The biggest area today that was pretty easy to see today was this 4150 level, and watch the market gravitate towards that. Whereas SPY, we can see with SPY, nice liquidity comes down in here, market pulls down to it, bounces, nice liquidity up above, so that's where we're looking for the market to push to. We pull back off of that, get back up to it, find support on it. When we have that, what are we looking for? We're looking for the market to push back up, push to the next major level. And of course, we had major liquidity on 413, 414, 415. So thankfully, we were able to catch it right here at this 413 liquidity for short to the downside. So again, but our bias was the market was going to push to that level, and when it got there, we were able to make some nice money on it. Now again, we didn't catch the dump all the way to 409 on the news. That would have been really nice. But with that said, Bookmap allowed us to make some really nice money on the overall market. So with that said, that'll do it for the Bookmap session. I'm going to do an education session for the ones in the server. So if you'd like to do that, I'm about to put up charts, and we're just going to go over a few things there for educational purpose. So you're welcome to hang around for that. So with that said, I'm going to swing on over to my charts. And we're going to start with yesterday's price action. All right, as you all know from the server, these are all the indicators in the precision indicator course. Just covered Bookmap, so that's the other big part of the puzzle. With that said, yesterday's price action, from the play channel, we got 2 shorts up here at this 413 level. So shorted the market twice up here in the SPY ES channel. Okay, and of course it gave us, both of those were easy winners. And we found the bottom as well around right here at 409 yesterday. So we had 3 plays sent out, found the top twice, and we caught the bottom. So anyway, so really nice day on yesterday's trading. With that said, things were pretty clean and concise. Got a nice vertical breakout here, starting around 48.50, pushing to 410, 410.50, so a $2 pump there. We were looking for another $2 on top of this vertical breakout, which was supposed to get us to 412.50. Pushed a little through that, 412.80, close enough. Pulled back to our midpoint, so very easy to take advantage of that. We knew this whole area right in here was really important. We have our major 15-minute moving average, our major 5-minute, an anchored VWAP. So we knew right through here there was going to be a lot of buying and selling off of that. As far as our algos, that was another thing that helped us on our 413 entry. Double algos there, and we know that when we have double algos, more than likely, the computers are going to have a stronger reaction based off of those levels. So with that said, a lot of ping pong between our algos. And of course, if you're not familiar with algos, these are these lines right here, computer algorithms. It's just algorithms that the computers trade off of that we always want to have on our chart, so we can have a good idea of where there's likely to be levels that buying, selling take place that you would never be able to see on any other indicator. So with that said, another thing that helped us yesterday was our 5-minute. We know with the 5-minute moving average, we love to use it as our measuring stick as far as being extended. So once we start getting to that $2.50 to $3 range, or really $2 to $3, we start looking for the market to get extended because it's, like I said, at that point. And sure enough, if you look at here, 411 to 413.40ish, so we got close to about $2.50 away from this level at this point, and got our pullback to it, extended away from it again, pull back to it. And then part of the reason why we got looked for our buy the dip here, one, we had an algo and an algo gap, and then we were also about $2 to $2.50 away from our 5-minute moving average here. So anyway, so yesterday was pretty easy trading. As far as today, let me see. Today we missed our initial entry. We were looking to get into 412. I was being very, very safe with this entry. Now 411 was the top of the vertical breakout here. We had our midpoint box. So that was that was the ideal spot, right around 411 to enter this, to play back to the midpoint box. But with that said, we were, with the amount of volatility in the market, we were trying to, for me to send it out. Now, again, we took advantage of it in the live voice trading, but as far as the ES channel, I wanted to play it. It's a little bit safer than usual today because, like I said, after yesterday's volatility, I was worried about today. And with that said, we actually got that extra volatility came in today. So with that said, the market again pushed up, got into the algo gap, and pushed all the way back up to 413. We did get it there. Like I said, we missed this entry. That came just short of it, but we re-entered or put another entry on here at 413, and that right there at the double algo, that was that one was pretty textbook. We were expecting this for sure to at least come back to our algo at 412.17. We got that pullback. They initially popped it off of it, and then we got the news at this point. This was our news right here. See, the market just started falling through the floor. We did have a buy the dip ready to go here for the 408 area, and see, the market came right around this area and then got a nice little pop off of there. So anyway, with that said, it was pretty crazy day to say the least. Again, using our 5-minute moving average as a gauge for being overextended, 408, 408.50 up to 411. We can see we got around $3 away from it there, $2.50, and then we got our pullback. And again, we get up here, up to our top. Let me see, 410 to 413. That's $3. So we had $3, and we end up pulling back. So like I said, the 5-minute moving average is a great moving average to really get on your chart. That way, like I said, you can start seeing, okay, how far if you're looking to start taking profit, you feel like something's getting extended, great moving average for you to take advantage of. And also too, whenever you're looking to short scalp. So you start getting, like I said, $2 to $3 away, that's when you start thinking, okay, where can I grab a pullback in the market? So with that said, a lot of bouncing through the algos today as usual, but with that said, some pretty clear price action, and definitely gave us some nice opportunities today. So with that said, that'll do it for the education using our Precision Indicator Course 2.0 indicators. If you have any other questions, just let me know. Thank you for watching the video.